ICICI Prudential Housing Opportunities Fund. Is this a good investment opportunity for you to create long-term wealth? Will this investment opportunity build assets in such a way that you will be able to achieve all your financial goals? Let us analyze and evaluate. Hi, this is Ramalingam from holisticinvestment.in. We help individual investors like you to take right financial and investment decision. Before evaluating this particular NFO, let us understand the key features of this particular NFO. This NFO is open till 11th April 2022. And this particular NFO focuses on housing theme. It is a thematic equity fund focusing on housing theme. This is not an index fund. This is an actively managed fund having benchmark as Nifty Housing Index. Minimum investment is just 5,000 rupees. The philosophy towards this particular NFO is, this particular NFO aims to invest in opportunities across housing theme. What is the detailed investment objective of this particular NFO? This particular NFO aims to create long-term wealth by investing in equity and equity-related instruments which will benefit from the growth in the housing theme. The investment universe of this particular fund is going to be basic industries like power, cement, consumer electronics. Basically, the industries which are forming part of Nifty Housing Index. So this fund is actually suitable for investors who are aggressive and at the same time who are bullish on the housing theme. If they are not bullish on housing theme or if they are not aggressive, then it is not recommended for you to invest in this particular NFO. Though this is not an index fund, this is going to be an actively managed fund following the housing theme. If we analyze the performance of the housing index, it will give us an idea. So that is why we are discussing the outlook of this particular benchmark index, which is Nifty Housing Index. The top constituents of this particular index are L&T, Asian Paints, HDFC Bank, ICICI, Tata Steel, Ultratech, HDFC, Adani Green, NTPC, Grasim Industries. And what is the kind of past returns this particular benchmark index has delivered? In the last 1 year itself, this particular index has delivered 39% return. 5 years CAGR is 17%. But however, in the equity market, what we have to understand is the past 1 year cannot define the next 1 year. So we can't expect similar returns in future also. If you look at the long-term performance graph of this particular index, between 2006 to 2014, there is no major growth in this particular index. The major growth has happened only after 2014. So between 2014 to 2022, this particular index has appreciated well. But the appreciation between 2006 and 2014 seems to be negligible. So being a thematic fund, this can take longer time frame for you to perform and deliver returns. So normally an equity fund will take 7 years plus, and a sectoral or thematic funds can take 10 years plus also. So understand that long-term waiting period before entering into this particular fund. This particular index has spread across financial services, consumer goods, cement, construction, power, metals, oil and gas. So this is not a completely broadly diversified fund. This is kind of a semi-diversified fund because the index is spread across some 6 to 7 sectors. So that way it is semi-diversified, we can say. As we have understood the key features of this particular NFO, can we now analyze the pros and cons of this particular fund so that we will know whether to invest in this fund or to avoid this NFO? We will be knowing very clearly. This fund is, as I told you, this is kind of diversified among the top performing companies in the housing theme. So it is a semi-diversified fund. We can't say it is a completely concentrated fund. Yes, semi-diversified. If you are looking for allocation to the housing theme, then definitely you can consider this fund as one of the funds. If the housing theme performs, this fund has got the potential to deliver you much higher return than other funds. So if you are really bullish on housing theme, then definitely this can really help you. If you are an investor who is looking for a high risk and high return kind of reward, right, then in that case, again, this fund can also be in your watch list. As I told you, suitable for aggressive investors looking for exposure to housing theme, provided if you are bullish on housing theme. You have done your homework, you have watched the trend, you have watched the outlook of multiple themes and sectors, and if you are having conviction that this particular housing theme will be bullish, then this is actually suitable for you. Now we have analyzed the pros, the key observations which are in favor of this particular NFO we have discussed, and now we are going to discuss the key findings which are against this particular fund, is what we are going to discuss now. Cons of investing in this fund, potential demerits of investing in this fund. Being an equity fund, this fund is not suitable for short-term investors, or when you have short-term money, short-term investments, this fund is not suitable for you. This fund is not suitable for your core portfolio. In the core portfolio, you should have a well-diversified conservative funds which will help you create wealth. The probability for wealth creation should be more, the probability for wealth destruction should be very low in your core portfolio. So as this fund comes under high risk, high reward category, you should not keep this fund in your core portfolio. And one important disadvantage with thematic funds is not all great themes translate into stock market returns. At times, a theme may look very attractive, a theme may look really promising. No, it may make a lot of hype, there may be a lot of news, but the particular theme will not translate into stock market returns. So thematic funds have got such a risk. Also, thematic funds and sectoral funds overexposes your portfolio to negative triggers. Say, for example, demonetization is a negative trigger to real estate and housing sector. In a diversified equity fund, when there is demonetization which impacts the housing sector, the fund manager can move from that particular sector and move to the other sector, whereas here it is not possible. And even in the diversified equity fund, if the fund manager has sizable exposure to housing sector, the fund will have an impact. But as it is diversified across multiple sectors, the impact will be less. But here it is not that way. You are overexposed to a theme. If there is a trend which is against this particular theme, then you will have a lot of negative triggers that can impact your portfolio negatively. So it will take longer time for you to recover from that impact. In the actively managed fund, the fund manager can move from one sector to other sector, one theme to other theme, based on the outlook of that particular sector or based on the outlook of that particular theme. But here it is not possible. Here this fund is not flexible. Their mandate is to focus and invest only on the housing theme. So they can't move out of housing theme and invest in IT or technology theme. They can't change. They have to stick to the theme. Though they know that the outlook for that particular theme is not bright, they have to stick to that theme. Because this fund has got a theme and a related risk, high risk, focused across few sectors, this particular fund brings more volatility to your portfolio. This impacts stability of your portfolio. As it is only semi-diversified, the portfolio is concentrated and focused. If the housing theme underperforms, then definitely this fund can be one of the laggards, and it can give you negative returns for a very long time frame. This can pull down the average returns of your portfolio. And timing of entry and exit into this fund, you need to decide. You have to study and decide. You should have competency to time the market, when to enter, when to exit. You should have the competency. If you are not having that competency, then like better to invest in a diversified equity fund where the fund manager has got the competency to give better allocation to a sector or theme. If that particular sector's outlook is good, if the particular theme's outlook is good, he can increase the exposure there. If the outlook becomes dull, he can move to another sector, other theme, right? The entry and exit from one particular sector or theme, the fund manager will take care. Here it is not that case. Being a thematic fund, the fund manager will stick to the theme. You need to decide whether to enter into the theme, when to enter into the theme, and also when to exit from this theme. You need to decide. As we have analyzed the key advantages and disadvantages of investing in this particular fund, what is the final takeaway? As an investor, do I have to invest in this fund or I have to avoid this fund? That is what the final answer we need. Now, the final answer whether to avoid or to invest, whether this is a good or bad, depends upon you and your existing portfolio. Yes, what kind of investor are you? If you are a first-time investor and a conservative investor, then definitely you should avoid, because this is high risk and high reward kind of fund. And there are existing housing opportunities funds with proven track record. So this fund is completely not tested and not proven. So the fund manager bias can be there. The ability of the fund manager to select good stocks from this particular theme is untested. It is not proven. So you have to, you are taking a blind risk here. Whereas in an existing fund, existing housing opportunities fund with a track record, there you can analyze the track record, how the fund manager has managed during demonetization, how the fund manager has managed like during the recent correction. All those things like we can analyze, do our analysis, insights, evaluation, everything we can do, and then decide whether to invest in that fund or not. Here simply you are taking a blind risk based on the theme. You are taking a blind risk. If you are an investor who's looking for a fund to give allocation to your core portfolio, then you have to definitely avoid this fund. This fund is not suitable for you. If you are not sure when to enter into housing opportunities theme and when to exit, then you have to avoid this fund. If like deciding whether to enter, when to enter, what kind of allocation to give, when to exit from this particular theme is not part of your circle of competence. Deciding these things are not part of your circle of competence, then you have to avoid this particular fund. If you are an aggressive investor who want to experiment in new funds, maybe with a minimum investment, you can experiment this fund. These kind of things you can experiment. Now we have did a detailed research on this particular fund. We have done a complete review of this particular fund. If we have any further questions related to this fund or any other investment options, feel free to book an appointment with our financial planner. The registration link for the appointment booking is available in the description of this particular video. We organize regular insightful investment webinars. If you are someone who would like to learn the investment strategies for long-term wealth creation, we have an upcoming webinar scheduled. You can click the link in the description box and register, book your seat for the next free webinar. If you're not subscribed to our YouTube channel so far, please subscribe now.